Ladies and gentlemen, welcome back. We got Sharp Talk coming at you. We got March 7th, 2022. We're in the midst of a pretty vicious bear market right now. Let's get right into it with the market outlook. Where's that? So the S&P 500 right now, we got the SPY futures up. We saw this long-term uptrend break earlier this year, very early in January. And now since then, if we look close, we're in a short-term downtrend. Every time stocks pop into this resistance area right here, we immediately sell off. We're seeing a big sell-off today. And, there's a lot of macroeconomic news going on. This, before this Russia-Ukraine stuff, we were dealing with huge inflation levels and the Fed tightening and those type of things. And then this kind of black swan event came in where Russia's invading Ukraine, which is only going to put more pressure onto that inflationary environment, make the whole supply chain system even more constrained. So, there's a lot of things working against the market right now. We're in this short-term downtrend. We're seeing craziness out of the oil market, really. This is kind of a once-in-a-lifetime move we're seeing here. It's up almost 40% in a couple weeks or whatever that number is, from 90 to 130 real quick. And then I saw today, another thing is this nickel. Look at these nickel futures. I've never typed up nickel in my life, but I've never seen a move like this also in my life. Nickel's up 70% today because it's predominantly mined in Russia. And
oh my God.
For electric vehicle batteries and things like that, they need to use a lot of nickel. So, people are thinking gas prices are high, it's good for electric vehicles. Well, not when nickel rises 70% a day.
Look at that.
So, other than that, we're in this downtrend. We're seeing, stocks continuously sell off. What are you thinking over there, Bennett?
No, so I'm looking at this nickel futures, and it's just like the nuttiest chart.
It's nuts.
Yeah, but I think even like with the we really don't talk much about commodities, but I guess we will for the moment. Again, like the crude oil at I guess it's like 120. I don't know if it's going off a barrel or not, but we talked about it earlier when it was like we were joking in the chat earlier today. We're like we should have been buying it at a penny a barrel back in like April 2020 when it was the opposite end of
right
the oil trade right now. But it seems like a little blow off topish. I think just the action like today, like it was up 10% plus over the weekend, and it slowly kind of came back. And again, 40% or 30% plus in a couple of days is not really a sustainable move. But among all the sectors, energy definitely has been the strongest sector this year. Because it was one of the worst performing sectors in 2020. And that's like that broad rebalancing that, last year's losers often are this year's winners. And we're seeing that more so with just consumer discretionaries and technology that were like the prom king and queen of, March 2020 up until basically then in 2022 and in 2021, that those both were the biggest leaders. And now technology and consumer discretionaries are kind of two sectors that are getting beat up pretty badly, and we see that just with overall leaders when they have this 3, 4, 500% run up, they can easily revert pull back 70% of that overall move very quickly, and that's something that we're just starting to see. Again, very pretty bleak out there. Again, biotechs have been very weak as well. Telecom has been the weakest and kind of showing us. You mentioned that downtrend in the SPY. The telecom sector is showing us that same exact downtrend, much more exaggerated because it's been going on for longer than the broad market has been pulling back. But when you look at the move that telecom has had from the 2020 lows up until the 2021 highs, we pretty much retraced about 50% of that overall up move. And could we see that in the broad markets? That we don't know. For now, we're just in this downtrend until we start to base out.
All right, very nice.
All right, so with that, you want to jump into a couple top ideas?
Yeah, for sure. I'll run through alerts. But as far as a macro event, if we do see a ceasefire, if we see Russia back out, which means all these sanctions will be done, just buy the shit out of the S&P. Just for me, just buy the shit out of the SPY. That's all I ask. We're going to see it literally go up 5% in an hour, I think. And what'll happen is we'll see that bid come into the market, and we'll just see a green bar like we've never seen and we'll say, what was the news? And then we'll read it was a ceasefire. Buy that bar, all right? As far as top ideas goes, we had this Regeneron trigger today right through this 624, 625 area. It gave a nice pop this morning. I know Val took this one and he took some off into the strength, but it since retraced that move in this market weakness. This Halliburton gave a great, oh, that's the wrong Hal. Halliburton gave a great move. You know, we were trading all those oils names last week. They got extended. This Halliburton was one of the few that, you know, hung around and gave an entry today. You had to buy that one right off the open. So that one looked really nice. This AMAT, A-M-A-T, this was a short setup. These, it's a industrial stock, you know, just testing a huge support area. You know, broke that support area to the downside in this market weakness, and, you know, it's trading at lows as we speak. And then what happened with this IT? Yeah, so this IT was another short below this resistance area. We can see that one. It's trading lower right now, but it's, you know, it's on the third day down, so that's not as you know, high probability as a setup for us. We would rather, you know, buy the, short that after that first day down, but, you know, it's working out for now. Some names I'm keeping on the radar now. This chart I really, really love is Kellogg, K. So I've been talking about it a little bit, but if we look at this action today, up almost 2% on a day. Pretty much all stocks that are not energy related are getting smoked. You know, that's big information there. Okay. It's coming out as huge base. You know, 68 would be the trigger. Definitely want to keep my eye on this one. I think it's got really, really great upside. I'm honestly surprised to see it moving the way it is today. I'm keeping my eyes on this BXP here. Boston Properties, it's a REIT, not the most exciting or flashy name, but it's got a nice flag here. It's holding up really well. It's showing great relative strength. So if it can, you know, overtake that 124 area, I think that one's got a lot of room to rise. Dollar Tree, DLTR. I was glad to see this one fail today. You know, I want to see this daily chart consolidate really well and give us a really tight entry through this, 148, 149, through this 149 area. Definitely shaping up well. I think it needs, you know, a week or two before we look to enter that one, but I think that's one we want to keep our eye on. And then HOLX is another one. So if you look, it's in this huge macro pattern from highs dating back to January 2021. It's been since downtrending a bit. You know, we're seeing lower highs, lower highs, lower highs, and now we're starting to see it pivot. We're seeing the support area come in. So now if it can overtake this 73 area, I think it's got room to rise. If it takes out that 76 area, then I think it could begin to trigger that macro trade. So, you know, if you were to trade this one, I would buy that 73 area, trim into that pivot, but definitely hold onto stock, and then try to hold on to some for the greater move. You know, obviously it depends on, you know, what the market's doing and if we're still in this environment where we're selling off, you know, every few days. But if we see that come to a stop, you know, this could be a really high risk reward setup that I want to keep my eye on. But that's mostly it for me. A lot of things triggered today. What are you looking at over there?
Yes, so you really can't see my screen, but for people watching, if you can see on the right side, like Shake mentioned Kellogg's, which is a consumer staples. We can see the consumer staples sector like on this. We have on like the strong list. Shake mentioned a REIT name. We also have REITs on here. So he's looking at the strongest sectors. Even amongst the weakness, there should always be a sector or two that are strong, even inside an overall downtrend. But some individual names, again, last week that some of the trades that worked really well, that some of us made some money was like LMT was a really good one. I know Django made a boatload on this Oxy, which was actually a trade that I kind of messed up where I got out of it on Friday with that little doji at highs. And then, on Thursday, and missed Friday's ridiculous move. But shouts to Django for pretty much trading it perfectly. Yeah, he was selling it pre-market when it was, I think, up in the 60s, and then got out most of it pretty much off the open. And, you know, he 40% plus move in 4 days or 5 days. That's the trade of the year.
Yeah, absolutely. And what was really impressive about him is the conviction he had throughout the whole trade. He was very strong in his stance that we would see this, you know, parabolic move, and we got it. And he sold into it. You know, you can't trade it any better than that.
Yeah. So again, the only thing I'm going to keep an eye on is HUBG up through 87 versus 82. Couple little bases forming. We have this BCPC up through 142 versus at 133 pivot low for now. HELE, Helen of Troy, which I just think is like the coolest name of a company, but Little base up through this 212 versus 202 for now. Not nowhere near 8 plus. These are like B, C setups at best because a little bit of slim pickings out here. The CTVA was setting up onto this 52, which went today in complete reverse, so that's going to be off the radar. And Travelers, one of the members called this out this morning on the pre-market call up through this 175. Looks pretty good. But
yeah,
again,
insurance names are actually getting bid up. I was surprised to see that one too.
Yeah, so this up to that 175 would be, Dow 30, very large cap name that you can kind of feel a bit safer in than some of the smaller cap names. And talking small caps very briefly, for the IWM, like under this 188, it did a great job retesting that low. And oftentimes you see that retest of that low, and you can really get like a strong air support off it. But as we continue to roll back over to it, more than likely the small caps are going to kind of smoke this 188 level.
Right.
And my guess or thought would be we just continue that roll over lower, as the 200 days kind of curving lower, and it just seems like that would be kind of a sector you want to maybe avoid in the short term. It would be the small caps. But with that, Sheikh, you want to get into any good and bad trades?
Yeah, for sure. Let me take you on a little journey of my past week here. So last week on the chart talk, I was talking about how I had this great entry into the S&P off these lows, whatever it was, February 24th. We had that huge gap down. We saw some extreme fear in the market, but the market was so oversold. I was like, it wouldn't be the biggest surprise to me if and that was the day that Russia invaded Ukraine. I was thinking it wouldn't be the biggest surprise to me if we bounced back just as an oversold bounce. So I bought that and I ended up selling it for like $2, and I missed out on like $28 of upside, and it was killing me. So one thing I was working on is kind of seeing the forest for the trees more, if you will. Try to get more out of my ideas, not be so micro in the scalping. So I used that, and I did a lot better with it this week, and I had a great QQQ short that I'll show. Let me get this up. So, all right. So the market's been downtrending. This is the QQQ daily chart. We see this downtrend, and we had that big bounce off lows February 24th, and the number one question everyone was asking is the bottom in? Is the bottom in? Is the bottom in? So then we have these 4 days of consolidation, and we're looking strong. But on that fourth day, I was trying to get long some tech stocks. I was trying to get long AMD. I was trying to get long some NVIDIA. And I was watching the NASDAQ and the market rise, but we weren't really pushing higher. It was like kind of like grinding at highs. We had really low volume. And it really reminded me of, if you look back on February 8th, February 3rd to February 8th, we had this consolidation, and everyone in our chats began posting all these bullish setups because we got the 4 days of consolidation. Things started looking a lot better. And I was in the same boat after these 4 days of consolidation. I was trying to buy NVIDIA, I was trying to buy AMD, and we opened higher, what was this, Thursday? And I just felt that like nothing was catching a bid. Like nothing, it just seemed like the market was so weak off the open. And if I hadn't spent the whole previous day just staring at the NASDAQ kind of just, consolidate, but not really move higher on this low volume. You see this low volume here. And then I saw us open up with this huge selling volume. I got short 348 against this 350. I covered some into this first weakness, just trying to get more comfortable swinging with whatever I had. And then I had a great swing trade on my hands where I'm still holding the short. I covered some today, but I'm really trying to get them as much as I can out of this move. Again, trying to see the forest for the trees more, trying to think bigger in my ideas. So I did really well with that trade. I was really mad at myself for those NVIDIA and AMD trades looking back. I was trying to buy them at support when, we weren't seeing relative strength in tech. We weren't seeing the semis rip. It was more that I wanted these names to bounce back because they were giving such quote-unquote tight entries, but it was at support, and really they were just a short. So, that pretty much sums up my week. I had a couple other little cute trades, but those are really the ones I want to highlight. That QQQ short was really nice, and we just got to kind of accept we're in a downtrend until we're not right now. What have you been doing over there?
So I only have two. So I kind of highlighted the Oxy before. This was a name that I've been in for a very long time. This was one of the kind of pre-pandemic names that I got trapped in, just not having a stop. And when energy got destroyed in the pandemic, there was really nothing to do other than just kind of sit with the name. So again, I've been in the name for quite some time, and given this, the first time that Oxy's ever been talked about in the last 2 years has pretty much been the last couple of days, and getting that like 3-day run up, from basic, this thing pretty much increased almost 100% in, less than a month or so, and getting this big run up, it just seemed like a gift to finally get out of this name. I didn't make that much. I think my overall profit was like 10 or 12%. Like I had not the best cost basis overall, because I was pretty much buying this before the pandemic started. And finally now, 2 years later, I'm finally out of this thing. Like, I'm so happy to be done with it. But it's like always so funny. Like, I was in this thing for 2 years pretty much, or a little bit less than 2 years. And I sell it, and then like the next day it has its like biggest day of the last 3 years is like the day before I get out of it. Again, the only thing I could have done better on my end to been a part of that was just I should have had a lower day stop. And even though, again, it's hindsight now, but that would be the only thing, was instead of trying to, like take it off at 40, whatever I was selling, I think it was like 48 and change, like 48 quarters, something like that, which in the moment seemed like a great sell. Next day, inside day, and then inside day and up. And had I used a proper stop versus taking profits into the up move, I would have been involved for the, I more likely would have been out today. But that was kind of the main thing, just sticking with the trailing stops for what works for me.
Yeah. I have a quick note on that. It was funny. I was listening to those Market Hedge Funds Wizards, those audiobooks. I was listening to the Unknown Market Wizards one, and there was this guy who he was doing a lot of systematic trading, a lot of like quant stuff, and the thing that was killing his system the most was when he would update his stops in the middle of the day. And he found that when he started updating his stops only at the session's end, that's when he would really get the most out of the move. So I thought that was very interesting. It kind of lines up with exactly what you were saying there, where it's like you messed up the stop because you changed it to an intraday low, and if you had the regular day's low, you'd still be in the trade, missed out on a lot of upside, but definitely a good lesson in there.
Yeah, and that's something I was talking with, I think it was Kyle. One of the Kyles, about the stops, and like for me, it's like I don't move them until like at least the afternoon, and maybe with that person, like the end of the day is probably even better. But for me, it's usually like by the afternoon. If the stock is trading higher, it's amazing. If it's trading lower, you kind of see the writing on the wall. But like he was doing it too soon off the open, and it's like then it's kind of like you're not rolling the dice, but you don't have as much information. Where definitely with him, like later in the day, moving those stops tends to be much more helpful, because you can see, even for this, like if you were involved in Friday's action, again, it's a crazy, and that was like I had the combo with Django where it's like it was up 17% on Friday. Even if you're trailing it low of day, are you going to give it 17% back to sell it $5 higher when you're going to catch this gap up? Like, why not just take the extra $5 now and screw having to give it that room when it's probably going to come back into that, just as quickly as going to run up 50% in 3 days. It's just as quickly, can reverse a chunk of that move.
Yeah.
But the only other thing really was rebalancing regarding M1. I haven't done anything with M1 big picture wise since I've started to buy the big picture on M1. Individual securities, the last time I really did anything was when I was taking profits in CRM, in Etsy, and a lot of those names kind of before the market really started to get smoked. Not that I thought that was going to happen. It was just kind of trading the chart. Like with Etsy, this name was breaking out to an all-time highs and was coming back under. And that was just a sign for me to just take profits. And I just did that with a lot of those names, with Etsy, CRM, and all of them. And in the last 2 months, it looked like a great idea to have done that. And now it's time to start, for me at least, to start adding back to these names now that they're at better prices than where I was selling them 2 months ago. So for Apple being the main one of my longer term holds that is still up a significant amount percentage-wise, it made sense for me to take profits in Apple. So say I had a 5% allocation in Apple, I lowered it down to 1%, so I still have some of it, but I took the profits from that and I added it back to names like Etsy that now I can pick it up down here, which of course today doesn't look the best, but that was the rebalancing of taking profits in the winter, kind of broadly top right, and then adding it back to my losers, relatively speaking. So that was just one little M1 change that I did today.
I got a question about M1. So there's not really a large focus on dividends, is there, M1? I guess it's more of like an active but systematic type of way of trading it. So you guys were saying you were selling Apple today, and I'm trying to hold on to all my Apple stock for dear life, so I can just hold on to these dividends forever. So M1 is, I guess, not as concerned about dividends. It's more about the rotational aspect.
No, I mean they focus more on like this, just the systematic part of it. Where again, you're going to get the dividends. You know, for those names that I'm buying, other than Apple, and maybe CRM doesn't pay a dividend. So pretty much all the names that I'm buying individually, other than Apple, don't pay dividend.
Okay.
Obviously, the sectors, all the big picture ones, they all pay dividends. So the average dividend yield on the big picture is 1.7%.
Okay.
Apple's dividend yield is probably around 1% right now. I don't know. Was it 88 cents? Actually, it might be 0.5%, their dividend yield. But that's like the dividend is always like the cherry or like the sprinkles on top of the sundae, where, you know, for me, am I going to give Apple back 35% for 0.5% in dividends a year? That I'm not going to do. But so that's where I just treat the dividends just as like the bonus, the 1.5% or so for the big picture, which I'll get, a quarter of that every quarter. But they mentioned like when you're on the home screen, it'll show you like dividends earned and they'll email you and get paid out dividends. But I'm not trying to hold a name just because the dividend, because it's often such a small sum relative to what the stock is going to do.
Okay, that's fair. That's fair. My thinking is that if I'm in these stocks for long term, years and years, the dividends, when the stock gains like a significant percent, the dividends will start multiplying in your favor. So that's kind of what I was thinking about in regards to that M1. But I guess you guys aren't. It's more rotational, more active trading.
Yeah, because even like the only names where like in that spot where it's gonna like add up is like a name like Verizon that's gonna pay out 5%. Where like the rule of 72, if, based on that dividend yield, it's like if you put $1,000 in Verizon, it would take you, I think it's like 12 or 13 years to double up that $1,000 to $2,000 on the reinvested dividends.
Yeah.
But when it's like for Apple at 1%, that's like 72 years for that $1,000 to double because it's such a small payout. So that's that's where I just treat it more as like it's a bonus, but you're not gonna
see the dividend.
you're not retiring. If you had $1 million in Apple, you're making what's it like $10,000 a year off the dividend. Where that $1 million in Apple could grow to $2 million or drop to 500 from just the share the fluctuation of the share price.
Yeah.
And that $10,000 isn't gonna change the person's life that much compared to the share price.
Yeah, absolutely. You just hear stories like, and this is what my goals in my IRA and things like that, of guys who bought, Home Depot. It's $320 now. Bought it, years and years ago for like $60, $70. So now the dividend is almost, twice whatever his cost basis was. Yes, it's like 10, 15 years later, but that's what I was kind of wondering from an M1 aspect.
Yeah.
But
the only crazy one that like I've ever personally been involved with was like, and in that example, it's like I bought Ford back in 2008 at $1 and then like sold it literally 4 days later at $2. But at the time, like if I had kept Ford until today, even though they don't really pay a dividend now, I'm pretty sure they cut it or they're like just randomly paying them out. But from 2008 until pretty much like 2019, they paid them out pretty consistently. And they were paying out, even in 2020, 60 cents a year in dividends. So on my $1 a share investment, I'd be making a 60% return yearly on that dividend. So I think that's kind of like what you were going at with it. But again, of course, I sold Ford literally like 3 days later and thought I was like a genius making $1 on it. But that's that example of like it was like 1,000 shares at $1. It was $1,000 investment. I would be making basically $600 a year off of that dividend. And with some of the oil names, like even when MLPs got really destroyed, it was like 2 or 3 years ago, there were some MLPs that were trading at $80. They got whacked down to $4 or $5, still were paying out a crazy dividend. And if you actually bought it at $5, and then within months it was back into the 30s and 40s, you were still getting like $5 a year in dividends. So you were making like 100% on it. But those are like those kind of Hail Mary
very rare scenarios.
situations. It's tough at like the like we're never going to get those trades in like an Apple from the dividend. It's going to be like you mentioned, like Home Depot from 30 years ago, that you have like an insane cost basis, that when those dividends do come into play, you have such a crazy cost basis that like it's nutty. But when the stock's already really developed, like Apple, it's going to be hard to really bank it off the dividend.
Yeah, no, yeah, I feel you. All right, just wondering. Good answer there. You want to jump into the book of the week?
Yeah.
Yeah, so I was reading those Unknown Market Wizards books, and those are interesting because the Market Wizards ones are more portfolio managers, and there'll be some traders in there too, but a lot of the styles are going to be very similar. For the Unknown Market Wizards, you get a lot of weird kind of weird strategies, and there were a couple that were really interesting to me. For example, this one guy, Chris Camillo or something. He's like a big dude on Twitter, whatever. He's got a lot of followers. So I was surprised to see him in the book. And what he did was this kind of social scraping, and this is before anyone was doing it, where he would look at data across the internet, and it's much more than just like hot words. But it, like for Netflix for example, he saw within the data, within the scrapes that he set up, how big Squid Games really was. It was like 5 times as watched as like any type of shows, or 5 times as talked about as any type of show. So he would know way before anyone else that that it was just like a monumental shift for Netflix. And there were a bunch of other examples. I forget the better ones. Netflix isn't a great example. Let me see if I can think about it real quick. What was it? Oh, another one was Under Armour. And when they made like Cold Gear, remember when in like high school when they came out with Cold Gear and stuff like that? Mm-hmm. And all the other gear in that was like Patagonia and stuff, and it wasn't very cool to wear. And then he saw how much the internet had loved the Under Armour Cold Gear and things like that, and he bought the shit out of the stock, held it into earnings because he anticipated the earnings would be so good. And he ended up making like 60, 70, 80% on the trade or whatever it is, all because he was scraping that data, and he had kind of, it's not inside info, just like amazing research that they kind of had a game changer in their stock. So that was just one interesting story. Those Unknown Market Wizards are they're always a good read. What you reading on over there?
So mine is the 5 dysfunctions of a team. So it's more just like a story that it's like this new CEO comes into this tech company, and there's just a lot of this like disarray within the company, that they're supposed to be like the best tech company. I think it's like a made up story, it's obviously not real, but they have more money, a better technology than all their competitors, but the competitors are beating them, and a lot of it just stems from the employees just not being on the same team. They're out to be like, they want to be known, they want to be recognized for the individual work to do. They don't want to be recognized as like the team, and like all the inner personal conflict. And they kind of have like this chart where like on the bottom of this pyramid, it's the absence of trust. So if you don't have trust, you don't have anything. If you don't trust me or I don't trust you, there's really no business. Then there's the next level up is like the fear of conflict. So if I think that Apple's a stupid trade and you think it's great, but I don't say anything, that's like that fear of conflict, and the business can't grow. Then there's lack of commitment. You can't stick with things that you're wanting to work on. The avoidance of accountability. So if I tell you, Sheikh, I'm going to get this book published by next week, and then I don't, and you don't call me out on it, so on and so forth. And then like lack of results. So they have like this little pyramid, and the book kind of takes you through that pyramid. So in the beginning, there's that lack of trust. No one really wants to argue with each other when they have conflicting opinions. And it's kind of just taking you through that, trying to teach you these stories in a story format than just saying like you need to have trust before you can work on addressing conflict and things like that. So definitely a pretty interesting read. Even like we sent out for like the guys that work, the guys and girls who work on Trading Experts, present like that retention book. And this is like another one that can kind of go more into that topic of, us working as a team and getting stuff done to, better the business.
Yeah.
That's what I'm reading.
All right, good stuff. All right, with that, wrap this thing up, folks. We'll see you next week.